Wall Street closes lower after mega cap tech earnings. Google delivers a beat on revenue while Tesla numbers miss estimates. Asian markets trade largely lower while the gift nifty suggesting a weak start for the Indian market. Finance Minister Nirmala Sitharaman's record-setting 7th consecutive budget focuses on continuity and growth, uses the cushion from a higher dividend from RBI and public sector companies to enhance and introduce certain welfare schemes and incentivize employment generation. Allocation to capex, defense and subsidies remains the same, so does allocation towards PM Kisan and Manrega. Finance Secretary T.V. Somanathan clarifies on long-term capital gains tax on property, says value of the property will be as of 2001 or a later date for the purpose of indexation, even as LTCG gets hiked. On the higher taxes on capital markets, CA Anant Nageshwaran says the STT is a message that speculation is detrimental to the investor himself. HUL's first quarter revenue and volume growth meet expectations. The management indicates a revival in rural demand and guides for margin to remain steady near current levels. In key earnings to track today, Axis Bank is expected to report a weak set of numbers. L&T is expected to report strong order inflows, but the street will be keeping an eye on core EPC margin. Good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast. It's the day after the budget. Too many headlines, a lot of clarifications from the government itself. So we'll keep talking about that through the course of the show and the day as well. But we have to look at the global markets. So let's start with the Asian markets first up, because they're largely lower right now. It was a weak handover, and that is something that has continued for some of the indices for sure. While the Taiwanese index, it is seeing a big green today, up around 3% The Hang Seng is lower. It's down around 0.3%. But if we look at any other index, that's lower right now. Shanghai is down around 0.2%. We have Nikkei, which is absolutely flat, but with some negative bias. So that's largely the Asian market picture. The gift nifty, that'll come up for you on the screen, and that one is indicating that the start for our own markets could be in the red. We did recover from lows yesterday in our trading session, but ended in the red. Looks like it could be another day when the street has digested the budget, the analysis has been done, and more will be done today as well. But let's talk about the US markets. Wall Street ended marginally lower ahead of key earnings from tech bigwigs. The Nasdaq fell by 10 points, while the S&P 500 ended almost flat. The Dow Jones also dipped by 57 points. CNBC's Bertha Coombs gets us a wrap of all the action on Wall Street.
The Dow was down 57 points. The S&P 500 was down 9, while the tech-heavy Nasdaq gave up 10 points. Sales of previously owned homes fell 5.4% in June compared to May. That's a fourth consecutive month of declines, according to the National Association of Realtors. High mortgage rates and high prices continue to hinder the housing market. Home prices spiked even as sales slowed, and supply is now at its highest level since 2020. Federal regulators launched an investigation into Delta Airlines today as the company struggles to recover from Friday's global IT outage. Transportation Secretary Pete Buttigieg announcing the move on X, saying that the probe is to ensure that the airline is following the law and taking care of passengers amid thousands of canceled and delayed flights. Delta says it is working to make it right for customers and is cooperating with investigators. That's what's happening here in the U.S. Back over to you in Mumbai.
All right, that's the Wall Street action. But let's hear out some opinion from JP Morgan Asset Management's Gabriela Santos on the U.S. policy and the Fed's rate cut trajectory.
We tell clients it's a bit, A, too early to know the outcome, B, to know the true policy that's going to be implemented. And even if you do know that, it's hard to actually figure out what the investment trade or investment would be. For example, I think there's a lot of focus on deferring policies around energy, for example, between Democrats and Republicans. But actually what we saw under the Trump administration is that traditional energy was down 40%, clean energy was up nearly 300%, and vice versa under Biden. So we take all of the political and policy developments with a grain of salt. That said, the one big underlying read-through we see is higher deficits. The discussion is really just about the slope of that deficit, and that'll dominate all of next year. Yes. Does it actually matter when the Fed cuts rates? I think there's quite a lot of exhaustion on this Fed discussion. I think the most important thing really is that the next move is a cut. We've really taken off the tail risk of further hikes from the table, and that's really what the December pivot was all about. And in and of itself, that's a more constructive backdrop for risk. That said, it does matter if they cut sooner rather than later, because we want Fed cuts to be proactive rather than reactive.
Okay, all right. That is an expert opinion coming in. But Nasdaq futures under slight pressure after mega cap tech companies Alphabet and Tesla reported their second quarter results. Although Alphabet reported a top and bottom line beat, YouTube advertising revenue fell below the consensus estimate. Meanwhile, Tesla shares declined more than 6% on weaker than expected results and a 7% YY drop in auto revenue. Okay, all right, that's the global market action. But how will these overnight cues impact our own markets? We have our research team joining in bright and early with what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hi, guys. A very good morning to all of you. It was a busy day yesterday and definitely looks like another busy day today. But let's talk about the markets. What would the market setup look like today? Harmaz, let me start with you.
Morning, Sonal. And the key to today's session will be that the recovery that we saw in yesterday's trading session, whether that sustains or not. And it was a very swift recovery as well. We saw that dip after the finance minister's budget speech was over, but then the Nifty recovered 400 points from the lows of the day. The mid-cap index even recovered almost 2,000 points from the day's low. And a similar kind of recovery was seen in the small-cap index as well, 850 points from the lows of the day. And this despite some negative developments coming in, be it the increase in the STT, the tinkering with the LTCG and the STCG rates as well. So it was a swift recovery. The Nifty ending slightly below that 24,500 level. So that remains the key in today's session as well, and whether that recovery will sustain in today's session or not. What led the recovery? It was FMCG. Of course, it was the top sectoral gainer yesterday. There were stock-specific positive announcements coming in for Titan, for ITC. ITC ended up getting some upgrades as well. And the sector will remain in focus today as well, because HUL, United Spirits will react to results. Some stock-specific announcements from Tata Consumer as well. Where did the pressure come from? From real estate. Some negative announcements coming in from the budget. 8 out of the 10 stocks ending lower there from the index. It recovered from the lows of the day, but still ended significantly lower. The other pressure point, though, was banks, and the Nifty Bank now closed below the 52,000 mark in yesterday's session. That was supposed to be a key support level, so we'll watch out for that. It's expiry today as well for the Nifty Bank. We'll keep an eye out on that, and also keep an eye out on PSUs, because it was the PSE index that sold off yesterday as well. Most of the index constituents ending lower, led by REC and PFC, and it was some very heightened trading activity seen in the PSU names, as 4 out of the top 5 traded stocks yesterday were PSUs, being HAL, RVNL, IRFC, IREDA. You can see the numbers there on your screen, and a lot of earnings as well today. We'll watch out for Axis Bank, L&T and SBI Life, and the GIFT Nifty too is indicating a slightly negative start for our market, so we'll see if that recovery sustains or not. Back to you.
Okay, yes, that's the market setup. Thank you so much, Harmaz, for that. Let me go across to Sudarshan now. He will list out all the stocks to watch out for in today's trading session. A lot of earnings, a lot of news updates, Sudarshan. Good morning.
Morning, Sonal. So apart from budget impact, we will see the companies reacting to the earnings and news flow. So starting with HUL, it was in line to slight beat for Q1. EBITDA has come in at rupees 3,600 crore against our poll of rupees 3,540 crore. Margin was at 23.5% versus poll of 23.4%, and volume growth has come at 4% against our poll of 3 to 4%. For Bajaj Finance, it was mild miss to our poll. NI has come in at rupees 8,365 crore, and it has missed estimate by 1%. Asset quality, though, remains stable, and gross NPA has come at 0.86% versus 0.85% sequentially. United Spirits, it was an operational beat. Cost control and contained raw material have boosted margin. It has come at 19.5%, which is 220 bips higher than our poll. Prestige and above segment revenue growth has come at 10.1% versus estimate of 8 to 9%. ICICI Prudential, it was a mixed Q1. VNB has missed estimate while margin was in line. Value of new business has come at rupees 472 crore against our poll of 558 crore. Margin has come at 24% versus poll of 24.4%. Toyant Pharma, it was an inline Q1, strong growth in India business. EBITDA was up 14%. Margin has increased 110 bips. Parag Milk, it was again operational beat. Dairy sector margin expansion has continued. Overall volume growth was at 10% and margin has increased 180 bips. Schaeffler India, it has reported mixed Q2 earnings. Revenue and EBITDA above estimates. Margin has missed estimates. Revenue was up 15% and EBITDA increased 10% YY. Vedanta is going to consider second interim dividend for FY25 on July 26. Dr. Reddy's will consider stock split on July 27, and Apollo Micro will issue convertible warrants up to 265 crore to promoters and non-promoters. So keep an eye on these stocks that might be in focus today.
All right, Sudarshan, thank you so much for that list. Let me go across to Mangalam now. He's joining in with all the cues from the F&O space. Morning, Mangalam.
Good morning. So if you looked at the close of market yesterday, you looked at Nifty Bank, the mid-cap index, you would not think that it is the budget day because we closed marginally lower. The mid-cap index lower by about 0.6%, was underperforming. The Nifty Bank down by about 500 points as well. It would look like par for course, but it was the volatility during the day which actually, told you it was the budget day. So the Nifty low of 24,074 is something that we'll watch out for. The Nifty Bank mildly above the day's low was an underperformer in yesterday's trading session. The FIs, they sold in the cash market. After a spate of buying in the month of July, over 20,000 crores, they sold 3,000 crores in the cash markets. And not just that, they also sold about 3,700 crores in index futures, where they unwound about 35,000 longs, added about 19,000 shorts as well. And they've been doing that systematically over the last 4 or 5 trading sessions. So if you look at FII long exposure, in the last 4 trading sessions, it's down from 81% to about 74%. And the net contracts have actually reduced from 3.9 lakh on the long side to just about 2.8 lakh on the long side. That tells you that they've unwound around 1 lakh long contracts or added concomitant short contracts on a net basis in the last 4 sessions itself. On the way up, we have some resistance upwards of 24,600. On the way down, however, the first support comes in around 24,350 because we have seen action at the 24,450 put. If you look at the 24,450 call, a premium of 100 rupees, 24,500 call, another premium of 100 rupees, telling you around 24,550 to around 24,600 will be some resistance. Watch out for the Nifty Bank options expiry today. Watch out for a lot of these stocks, Titan, ITC, HUL, United Spirits. The FMCG pack will be in focus today. Also, out of F&O ban are stocks like Chambal Fertilizer, Piramal Enterprises, Bandhan Bank and Hindustan Aeronautics.
Okay, all right, guys. Thank you so much for joining us and prepping us up for this trading day ahead. Let's slip into a break. Up next, we speak to the budget makers themselves as they clarify on the fine print of the new taxation measures announced in the budget. Welcome back. You're still tuned into Power Breakfast on CNBC TV 18. It's time to get you the big budget headlines. Real estate investments lose the benefit of indexation, which allowed property owners to adjust their gains for inflation. Finance Secretary clarified to CNBC TV 18 that the tax incidence under capital gains without indexation is lower and will actually benefit a lot of people. Also says STCG and LTCG were hiked to bring equity in capital gains taxation. Listen in.
So what we have tried to do is that inflation in India is fairly predictable in the long run. We have checked that the average rate of growth of the cost inflation index, which is used for capital gains, is about 4.6%. So it's predictable. We know that on average your assets for tax purposes, see, individual assets may go at different rates, but we use a steady index for tax calculations, which grows at 4.6%. Now let me give you a numerical example. I don't think anyone would make the case that property will appreciate less than a fixed deposit. That's not why people buy property. They buy property because it appreciates faster. And India is a land-scarce country. Property is bound to appreciate faster than most other assets. So let's say you expect property to appreciate at, let's say, 15% per annum. Take off 4% for inflation. Currently, with a 15% gain, you're taxed on 11%. Because every year you get a 4% knockoff for indexation. On 11% of the growth, you're paying 20% of that. So 2.2 is the tax that you pay. In the new system, you will pay 12.5% of 15%, which comes to 1.87. So it's lower. It's lower at almost any reasonable rate of growth for real estate, and we have calculated this. We have calibrated to be, in fact, for us it will be negative, because in most cases, the tax which would be computed on an indexation basis would have been higher than the tax on the non-indexed but much lower rate that we have imposed. So we've tried to keep it at a level where almost nobody will lose. A lot of people will gain because the indexation benefit will be less than the benefit that they would get. And
So-
one more thing I want to
Yeah.
add. We will continue to start valuing property only from 2001. So it's not as if that benefit is taken away.
That benefit is not taken away.
That is not taken away. The value of the property will be the value as of 2001 or of the date that it was acquired.
I want to build on the revenue mobilization argument because I heard the number 15,000 crores on account of the LTCG
Oh, yes.
changes. What do you expect that number to be, given the way that we are seeing, the markets
Currently,
move?
our revenues from LTCG are very significant. Let me tell you that we are already getting significant revenues from LTCG. I'll mention two figures here. 88% of the value of capital gains earned in India, according to our study, comes from people whose returned income is more than 15 lakh rupees. And 62% comes from those who are above 1 crore of returned income. So this is not a tax which is falling predominantly
On the
not
on the
at
middle
all.
class,
And
yeah.
this is the class of income which Thomas Piketty and others have been writing about all the time. Now, at some point...
it then begs the question, are you looking at a higher rate? Because that's the worry, that you've done 12 and a half. This is perhaps an odd rate.
If we were
Is it
looking at
likely
a
to
higher
move to
rate, if we
15?
were looking at a high rate, we would have done it.
But
Why
maybe
would we not do it?
maybe you're testing waters with 12 and a half,
No,
and
we
maybe
don't believe in
you'll
testing
So is
waters.
it going to be 12 and a half now for the near term? I mean, for the next few years?
There is no intention to revise it from here. I cannot speak for all the future finance ministers and finance secretaries, but I can say as of now, we have no intention of revising this any further.
So 12 and a half
Of course, no one can predict the future.
No,
Somebody else
absolutely.
may cut it too. I can't predict that. But what I am saying is we need equity in taxation. We can't say that only equity markets take risks and a person doing an MSME business is not taking risk and he should pay 39%. And because I'm taking stock market risk, I should not even pay 12.5%. There is a case for a lower rate on capital gains tax. It is much, much lower than the marginal rate of tax on other sources of income. And it's creating distortion in the savings markets also.
All right, that is an important clarification. We'll keep getting you excerpts of this conversation through the course of the day. For now, we'll slip into a break. Up next, we get you the cues from the commodities market. Stay tuned for that. Welcome back. You're still tuned into Power Breakfast. It's time to talk about commodities now. Manisha Gupta is joining us as always. Good morning, Manisha. Some profit booking on the cards.
Oh, well, it is, and it's not the best of the week for the bulls in commodities because we have seen extended profit-taking continuing in this week. So you have the crude oil prices, which fell almost 2% overnight and are trading at a one-month lows. Not just crude. When you look at the crude products like heating oil, that one is at a 7-week lows. Gasoline is trading at a one-month lows as well. Well, the markets are looking at, 1, the strength in US dollar index, 2, the weak data from China, and 3, it also is about Israel and Hamas ceasefire talks now gaining momentum. So that's weighing onto the prices. But the strength in US dollar and the weak economic data also is weighing on the base metal prices, where you have copper now trading at a 3-month lows, iron ore at a 1-month low, aluminum prices at a 1-month lows as well. Zinc is trading at 2-month lows. So, well, yes, there is no place to hide in metals. And the gold and silver prices, the kind of profit taking that we saw yesterday, has just about continued right now as well. So it's a 2-week lows for gold and silver, both of those precious metals.
Okay, all right. So 2-week lows for precious metals. Thank you so much, Manisha, for joining us as always with all the updates from the commodity markets. With that, we will take your leave on Power Breakfast today. But stay tuned. Bazaar Morning Call comes up next with all the market action.